Hey, hello and good morning everybody. Hi, this is me, Darius Anucauskas from Easy Markets, and today is Thursday. Look, this is a quick video preview for the webinar, which is going to happen in a few seconds, so do not tune out. We're going to talk markets, the BoC interest rate decision, the flash PMIs, which are coming out from various countries. So yeah, a few pieces of data here and there. We're also in the earnings season right now, so I'll pick up on a few stocks. And yeah, hopefully you'll enjoy the session, and I'll see you in a bit. Hey, hello and good morning everybody. Hi, this is me, Darius Anucauskas from Easy Markets, and today is the 24th of October 2024. So yep, welcome everyone. Welcome to this Thursday's morning session. So a lot of fours in this in today's day. Today's the Thursday, the fourth day. It's 24th and 2024. So yeah, beautiful number. Ladies and gentlemen, welcome. This is going to be a quick session about the, well, at least I'll try to keep it quick. But basically, yes, we are going to talk markets. I'm going to pick up on stuff that came out yesterday, what's going to come out today. So hey, we're going to look at the indices, commodities, cryptos, and currencies, the usual stuff, basically. Look, before we jump into all that, let me just quickly have a read through our risk disclaimer. So the content we produce does not constitute investment advice or investment recommendations and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm not going to disappear anywhere. I'm just going to finish off a few things here and there, and we can continue. All right, okay, so also just before we jump into the charts, just a quick mentioning of our Easy Markets website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. So now then, let's jump into the chart. Let's see what's happening. So hey, Nikkei is still feeling the heat, seems like that. We're drifting nicely to the downside, or we were drifting nicely to the downside, but now we've stabilized. Look at this. I talked about this 200-day EMA. Did I not warn you about this? Perfect. So I said that even if we're going to break this upside line, this tentative upside support line, still keep your eyes on the 200-day EMA right here, and basically that could that could still provide some support. And there we go, it did. We did rebound, we pushed back up. The only problem is that we're struggling, let's say, to climb back above this 38,900 zone-ish, somewhere around here. Well, okay, look, don't get me wrong. I mean, there is still a chance for the bulls to come in. The only problem is that given that there was some weakness, and we're seeing some weakness in the stock market right now, this could continue spilling over into some negativity. In general, I think the stock market is correcting nicely without any major fear or anything like that. So I think that yes, there is a chance for both, of course, as always. For the upside, for the downside, well, duh, Captain Obvious. But the thing is, for now, I'm kind of cautiously leaning towards the downside. The only thing is that I would prefer to wait for a drop below the 200-day EMA in order to go lower. For the upside, I would prefer to wait for, as I said already, a push above the 38,900 zone. While we remain in this area in between these EMAs, I'm just observing the price action and not really doing anything. So yeah, that's my game plan for Nikkei. Look, in general, Asian stocks are feeling the heat because there are some issues with the tech. The tech sector seems to be feeling the heat, as I said. But hey, for now, we will just go with the flow. Tomorrow, by the way, keep your eyes on the economic data from Japan. So yes, we are getting the Tokyo core and headline CPI numbers. So at the moment, the core CPI is expected to decline. Now, this of course does not really kind of go hand in hand with the idea of the BOJ to go and to do more hikes because inflation keeps on dropping. So on the contrary, you're gonna boost you're gonna cut rates in order to boost the economy. However, it's a very thin line because again you would also devalue your currency. But look, I'll get to this issue with the Bank of Canada in a bit because yesterday I had a very nice comment below my video, one of the short videos that I did on BoC, and yep, I agree with that person because again, but I'll discuss this in a bit. So yeah, coming back to Nikkei, unfortunately, if you're looking for some clarity, unfortunately, there is not much of it right now. China 50. China 50, okay, we're still struggling to push above this downside line. Look how well it's playing out. So the same game plan is still valid. I need to see that clearance of this downside line together with the 50% here on the Fibonacci retracement, and then we'll go higher. ASX 200, we're stuck. With the 45-day EMA is doing a fantastic job. We are holding above it. We're stuck in here in this little box, which I talked about previously. So now, if you're looking for some let's say, higher levels, then of course a push back above the 8,300 zone is required. If you're looking for some lower levels, then obviously we need to start off with the 45-day EMA right here. If that gets cleared, then I'm watching the 8,150. And if the 8,150 gets cleared, then amazing, more sellers here could join in. Let's jump into the Dow Jones Industrial Average, ladies and gentlemen. There we go. Boom, fantastic. We have managed to reach the upper side of this box where we were trading before. Look, everything's everything's working out perfectly in my opinion because so far so good. I talked about this yesterday. I said that if we do clear the 43,000 zone, then there is a good chance for this one to drift lower, where my next target will be this 42,680 zone. Tick. And now let's see what's going to happen next, and can we go and reach the 45-day EMA, or basically can we go for a larger correction to the downside? So for now, everything's, like I said, pointing towards lower levels. I think that it's quite doable. Let's see if we can reach the 45-day EMA first, and then maybe the 42,208 zone right there, and then we'll go from there. The S&P 500. The S&P 500 declined beautifully, and look, it fell below my 5,868 zone. That's wonderful. Anyway, what's next? Yes, I'm leaning towards the downside as long as we stay below the 5,868 zone. In general, this move lower is part of a normal standard correction lower, so that's absolutely fine. Nothing to worry about here for now. But now, however, if we start falling below the subside line and the 45-day EMA, then now that's where more bears could join in. So just kind of keep that in mind. In terms of economic data, today we do have a bunch of flash estimates. I mean, look, Australia came out already this morning. With its composite manufacturing and services PMIs, the services improved a little bit. It seems like that manufacturing declined a little bit, and the composite improved a little bit. So no major shifts here and there. But yes, Japan here, manufacturing did decline, I would say significantly. Jibun Bank's services PMI fell into contraction territory, and the composite number also. Basically, Japanese flash estimates of the PMIs are not very well. Look, in Nikkei, we're not seeing that, let's say, that big of a decline here or anything, because yes, flash estimates are important. However, when there's no other data involved, and or maybe there's let's say less focus on something else. So at the moment, I think that, in my opinion, I might be wrong, but the negative flash PMIs could sink in at a later stage. Right now, we're trying to filter out what's happening in the U.S. We know what's happening in general with global demand, with Chinese demand, and yep. For now, I think that this might, like I said, sink in a little bit later on. Oh, Tabish. Good morning. Good morning. Thank you very much for tuning in, as always. Thank you. I really appreciate that. Coming back to the situation with other indices. So the S&P, that's the story here. Euro PMI is coming out in half an hour. What are your thoughts? Okay, look, I'll jump into the German index in a bit, and I'll pick up on that. So Nasdaq, beautiful decline in general. I think that yes, the tech is not really feeling very well. As you can see, we fell on Nvidia. We fell back below the previous all-time high. Well, that is a bit of a negative indication, because especially looking at the weekly candles here, it's proving as a nice false breakout here. So let's see how this week is going to end. If we're going to stay below this hurdle, okay, then we'll keep an eye on the next week, because eventually, if the monthly candle remains here at the end of the month, and we're by the way approaching already the end of the month, so yes, that could maybe signal that there is potential for a bit of a retracement. Again, I'm not going to rush into things yet. For now, just keeping it, simple, trying to see what's going to happen with the 141 barrier, if we're going to stay above it or not. If we won't, I'm leaning a little bit towards the downside. Now the German index DAX. Look, oh, by the way, before going in there, because look, Tesla came out yesterday as well. They beat their earnings, and it was a good EPS number. In general, the company is doing relatively good. So basically, right now the stock is trading after hours around 239, if I'm not mistaken. Let me just double check. Yes, 239, right. Okay, so let's see how this is going to continue, of course. But hey, initially I was kind of hoping to see maybe a bit of a decline here on this one, but it held nicely. It did give us a tease a little bit here. And yep, the earnings sorry for the voice. The earnings managed to, lift the stock back up, so it's currently near the 240 zone, somewhere around here. Okay, look. Let's see how it's going to open up today, and where it's going to open up today, and let's say where it will fly today, or will it actually fall? Because some of you who are, let's say, trading stocks through technical analysis, then you say, oh, but we need to fill the gap. It doesn't always happen but most of the time, yes, you do get a gap filled. Not always the 100% of the gap gets filled. This is something important. It's around 70% that can be filled. Oh, my voice is going down a little bit. So what I'm saying is that, look, when we are going to open up here, do not kind of exclude the opportunity for a bit of a retracement back down here, and then maybe, buyers could pick up and push this one higher. Again, just a bit of speculation here. Let's see how this is going to play out. The German index DAX. Just a sec. Let me clear up my voice a little bit, ladies and gentlemen. I'll be right back. And yes, Tabish, Just a second, I'll be right back. All right, okay. So there we go. Cleared up my nose, my throat, everything. Ugh, yeah. Look. Oh, by the way, Tabish, Christian is not coming. Yeah, he's not coming today because he has some technical issues with the from his side, and basically we cannot. We're not in the same location, so. Yeah, we cannot really run it smoothly, and the thing is that I mean, we could. The only thing is that that connection probably would be so bad that yeah, it would be even pointless to run it, because then you would think, why are we doing this in general? So, but well, we'll try to do it next Thursday again. So, we'll have another attempt. Well, if you don't try, you don't succeed. So, coming back to the situation here with the German index, right? Okay, we're seeing a bit of a retracement on the futures here right now. We've tested this upside line, but the thing is that we tested the upside line, we broke it, and now we're kind of a little bit on the lower side, I would say. So, for now, I'm kind of cautiously bearish, to be honest, on this one. And looking at the flash PMIs today, the European ones, let me just double check. So the composite, yeah, so composite, manufacturing services, and all these, the current expectation is for slightly higher levels in Germany, apart from the services, and the Eurozone higher. Yeah, right. Okay, so slightly higher across the board. Now, look, if the numbers come out on the lower side, I think that this could be, because you're already estimating it that they're going to be on the higher side, and if they're going to come out lower, then hey, that's not really good for the stock market, in my opinion. We could see a bit of weakness maybe kicking in, just like a little momentum play, in my opinion, because still, the estimates, they're not final, so. We could see a reaction, but still, the main reaction probably would be from what's going to happen in the U.S. for now. We do have a bit of data coming out from the U.S. today, not major. The usual initial and continuous jobless claims. So far, those have been initial claims have been on a rise. Continuous jobless claims have been on a rise, which is a bad thing, by the way. Chicago Fed national activity numbers coming out as well, as you can see here. And also the US will deliver its estimates on the PMIs. In new home sales, that's what's actually quite interesting. New home sales, if the number here comes out a little bit on the higher side, then okay, great. This could maybe support the economy a little bit, but just give that little boost of positivity. Look, these maybe numbers are not the most important, but certainly they are quite interesting because you start building a bigger picture in general. So you pick up a little piece of data here, 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 and then you build it all up into one big idea, what you think could happen with or how could the market go further based on these economic indicators. For now, we're not trying to predict it. We're not trying to, let's say, play Nostradamus here and try to see the future. No, what I'm going to do, I'm going to wait for this one to come out. In general, what I'm looking at this index here right now, we're seeing, yes, some positivity. However, given that we've broken the upside line, so let's say if the numbers come out a little bit on the lower side, maybe this could end up traveling lower here. Maybe it could go for a larger correction back down. I want to apply the Fibonacci just out of curiosity. This, let's put it this way, this is not the kind of the most accurate one, but okay. something, so far it's working out. So this little Fibonacci drawn from the lowest point of October to the current highest point of October, we're seeing a nice retracement. We saw a 50% retracement already. Let's see if we can go for that 61.8. And for that, I would need to see a break below the 50% here, which is around the 19,426 here on my chart-ish, roughly. And that's on the futures, by the way. So, and basically, that's kind of breaking the low of yesterday. So if we can clear that, wonderful. I mean, I could go a little bit lower towards that 61.8. Now, again, if you're looking for some higher levels at this point, I think that, let me just get rid of this Fibonacci, it's a little bit in the way. If you're looking for some higher levels on this one, I think that this can be redrawn. I want to mark this little hurdle here. Look, if we climb back above the 19,530 here, I mean, we can stay above it. You know what? I think I'll have to reiterate that. I think this is a more interesting level. So 19,600, yes. So if we do climb back above the 19,600 zone, then basically I will get a little bit more excited with the upside here, and I'll aim for the current all-time high again, and then we will go from there. Long story short, we're playing the waiting game, unfortunately. Maybe not that much clarity here, but hey, sometimes, well, actually most of the times you get that in the market. You have to wait. You have to play the waiting game. Be patient, and it will pay out. The FTSE 100, let's have a look what's happening there. The usual roller coaster ride, nothing major, basically the same game plan is valid. A break of this upside line is required for the downside for me. For the upside, I need to see a push above this little hurdle, as you can see that right there. I don't think even an arrow is required, but nevertheless. So yeah, this is what I'm talking about. So a push above the 8,440 zone for me, that's could be the game. That would be the door towards some higher levels. US dollar index. There we go. So I would say mission accomplished. Mission accomplished because I was talking about this little idea right here. I was talking about this potential move towards the 104.50 zone. We came very close to that just by 10 points here. We didn't reach 10 basis points. We did not reach this one. Well, basis points actually, was 0.1 moment here. We did not reach this one. We were lacking, yes, 10 points from this. Anyway, you got the picture. I think I'm mumbling already. I think my morning did not start very well. Anyway, look, what can I say? If you're still targeting that 104.50, given the fact that yesterday we did not really end up testing it clearly. Okay, we could do that today, so that's why I want to be careful. But at this point, I would say that there could be a potential reversal building up. Now, I need some clarity, of course, before going any further. But I think that yes, we could be building some reversal signs here, and let's see if that's going to work. If we still go higher, then I'm still aiming for that 104.50. I know it's not far, but yeah, I'm just gonna aim for that one for now, and then we'll go from there, because I think this is a strong area of resistance, and we did have quite a decent up move already. So a bit of a nice correction, strong correction back down would be great. So yes, before going, let's say, higher again. But yeah, let's be patient. Again, the same story. Unfortunately, we'll have to wait this one out. Jumping into the commodity world, gold. Gold declined yesterday beautifully. Perfect. We tested the area near the 2,760, something like that, almost. Just let me double check. Oh, yeah, came very close. Fell shy by $1.50 to reach that 2,600 zone, 2,760 zone. And we corrected back down, but the most important, we corrected back below this hurdle. Yeah, there we go. This 2,733 zone, 35 zone. Basically, we fell below the Fibonacci extension of the 61.8% here. So That means that there is potential for a bit of a retracement. Okay, ladies and gentlemen, can we see that finally in gold? Well, for now, I'm gonna lean towards the downside, and as long as we stay below the 2,735 zone. If we climb above it, then I'll scrap the downside scenario and I'll just, yeah, I'll observe the upside again. But if for now I'm leaning towards the downside, let's see if we can stay here below this 2,735 zone. If we can, I'm leaning, well, ideally 2,700 zone, but then, or sorry, not the other way around. Ideally the 2,685 zone, but I think that 2,700 could be a good test. So let's go slowly on this, step by step, and then we'll go from there. Again, silver, beautiful move to the downside, drop below the 34.27, and everything's kind of looking good because look, we reached this this level here. It's not the all-time high, of course, I showed you yesterday, but the all-time high is kind of near the $50 mark, basically. But look, for now, we're correcting back down. That's all fine. So this is something that I'm watching here as well, this subside line. And let me just put this one right there. There we go. So for now, what I'm looking at here is I am looking at a bit of retracement, to be honest. I would really love to see something like this happening right now. Can we get that? Look, if we continue to trade below this 34.86, I think that there is a chance for a larger correction back down. But however, if we start pushing above that area, if we start pushing above this hurdle here, then above this 34.86, then yes, certainly there is a possibility for for some higher levels again being met. But at this point, where we saw a nice correction back down, let's see if we can get a bit of a larger one on this one. And yeah, it would be great if there are those bulls who missed this rally. There could be an opportunity to to step in somewhere around here. Let's keep an eye on this one. Jumping quickly into, oh, by the way, palladium, my favorite one. Palladium, there we go. Beautiful move here. I talked about this, and there we go. I mean, okay, it didn't really work out exactly as I was hoping it's going to work out, where it's going to just test this downside line and rebound from it. But, okay, close enough. I'll take that. But in general, my mission has been accomplished. We came very close to 1,122 territory. So hey, let's see what's gonna happen next. And yep, for now, I am leaning towards the upside still, but a confirmation break for me here is required through this 1,122 territory, and then we'll go from there. Jumping into oil very quickly, ladies and gentlemen. So, if you remember, yesterday I talked about this idea that oil could form something of a head and shoulders pattern here. Look, first of all, let's have a look what happened yesterday with the EIA number. Where's that? Where's that figure? There we go. So, yeah, stock change. There we go. Increase. Wow. I mean, look at this. I don't know how it did not fall even more. Because this is quite a significant number, ladies and gentlemen. So that's how much it increased. And let me just double check another source just to be a little bit more on the safe side. Economic calendar. Let's have a look. Yeah. Crude oil inventories. Boom. Yes, exactly. The same story. So basically, that really increased a lot. And I don't know how the market is not, let's say, reacting to this negatively. Maybe they really don't want to sell it off yet. But this, like I said, this should not be going higher. So the number kind of supports the idea of a move lower here towards this upside line. And hey, for now, I'm going to stick to my game plan. I'm going to lean towards the downside as long as we remain below the 72.40 zone right here. And then we'll go from there. In order to go higher, as I said to you before, I said yesterday to you that I would prefer to wait for a push above the 200-day EMA. But you know what? If we start pushing above this 72.40 zone, then yeah, you know what? I'll consider a move towards the 100-day EMA. Then I'll take a pause. I want to see what's going to happen there, if we're going to get a hold up or not. Like for example here, we could see a little bit of a bouncing around moment, and then if it breaks this, we could go towards the 200-day EMA, and then we'll go from there. For now, it's I'm leaning a little bit more towards the downside. So let's see if this idea will work out. But again, as I said, the number here, the EIA crude oil stock change number, did not really does not really support the upside scenario on WTI oil. Just a quick update on cotton. Yep, still the same. Natural gas. Okay, natural gas is stuck here, but still near its EMAs. I'm leaning towards the downside, to be honest. Look, as long as we stay below the EMAs, then yes, I'm leaning towards the downside. Sugar. Let's have a look at this one. Beautiful pop back up. And look, with sugar, everything's very technical. I talked about it. I'm gonna repeat myself over and over on this one because we're in a falling channel right now, so basically it could still drift lower. I mean, it could rebound from the lower side, and it did so. You can see it's pushing back up. Okay, this level needs to be adjusted, so I think this is a good point here, 22.95. I think that could be a nice good barrier for the upside. But for now, let's say also on the slightly bigger picture, you see that there could be a bullish flag here forming with a pole here with this little flag. Or in general, if you don't like to look at flags, then you can consider this as a kind of whenever we have like some sort of a channel or something like that, or like a triangle, then you look at the prevailing trend. The prevailing trend is to the upside, so there's a greater chance for this one to break out higher. However, I keep on saying to everybody that wait for this one to break out, and then we can do something about it. Let's jump into the crypto world, ladies and gentlemen. Bitcoin, yep, trying to make its way back up here, but then the question, can we climb back above this upper side of the falling channel? If we can, okay, I'll consider some upside. But the only thing is that my preferred upside scenario is from the 70,000 zone right here, the psychological 70,000 zone. I think that's a good barrier for the upside. So let's see if we can climb there. But the thing is that some of the adventurous ones probably will start looking at some higher levels already straight from on a break of this upper side of the falling channel. Again, to be honest, I'm not blaming you because it kind of does increase the chances for a higher move. But hey, let's not rush into things. Bitcoin Cash is at an interesting spot here as well, and yep. For now, it's also on a roller coaster ride. It tested the 45-day EMA, now rebounding back up. I'm not excluding, like I said, I'm not excluding the upside in general on this one, but I would prefer to wait for a break of this downside line taken from the high of the 15th of October. For the downside, actually at this point now, I would like to see a drop below the 45-day EMA in order to get comfortable with some slightly lower levels. Ethereum drifted lower quite significantly, I would say, and yes, it fell below the 45-day EMA. It now remains below the 45-day EMA, so something kind of tells me that if we're not going to get back above the 45-day EMA, we could see a more downside. Litecoin. Now this is where it's interesting. I mean, all cryptos are all over the place. They're not really following each other, which is fine. To be honest, I like that because then you're behaving like a normal currency. However, you know, a lot of these are no longer currencies. They are, some of them are assets, some of them are like, yes, commodities, some of them are like something else. So some of the, yes, not assets. Well, actually, they're all assets, but some of them are commodities, some of them are currencies. So it's a bit of a mix. So which, okay, makes it life easier, maybe. Maybe makes trading a little bit more interesting. However, again, maybe not for everybody because, you know, I think everybody's used to the fact that if one goes higher, then you just buy the other one, which is lagging, and it will go higher as well. I think those days are slowly coming to an end, in my opinion. Dogecoin, I want to pick up on this one, by the way, because I think that Dogecoin was rallying all the way up until up here on the before the Tesla earnings, and Flash PMIs data will be released within the webinar. Will you be looking at it? You mean the European one? Yeah, let's have a look. I mean, let's just a second. Where is that? Where is that? Where is that number? Thursday. Wait, I'm looking at Thursday. Just a sec. Just a sec. Germany. Right. Okay. Wait. No, that's already after the webinar. Yeah, because that's going to be like in 1 hour. Yeah, the numbers are the European ones. If you're Tabish, if you're talking about the European ones, those are going to be in 1 hour. The German ones will be in the 1 hour, and the Eurozone will be in an hour and a half from now. So yeah, unfortunately, no. I mean, I'm gonna finish this one earlier. But actually, this is a question. I understand you probably want to see the market reaction and you want to kind of see the commentary. So, would you say that would you find it beneficial actually? Because I'm considering I'm open to all suggestions from viewers and everything, and I'm always open to that. And do you think that this would be beneficial if we would, let's say, do some live sessions? Would do some live sessions, let's say when the data gets released. I don't know, just a question for the question actually not only for Tabish, whoever's watching right now. If you are watching this as a recorded session, let me know in the comment box, because then maybe we can make some arrangements here. So. Right, so coming back to Dogecoin, yes, I mean we saw the earnings coming out from Tesla, and we at the moment I think the hype kind of faded away a little bit here, so maybe a bit of a larger retracement on this one could happen, unless it starts pushing above the 0.1440 zone somewhere around here. Tabish, I would love that. It will with audience, it's a really tricky one, to be honest, because it's the way the YouTube algorithms work and everything. So if you manage to outsmart that, then yes, great, then you can attract. But sometimes you don't actually attract this. Look, in terms of doing webinars and important events, this is the thing, because look, we're not here to to tell you where to buy or sell or anything like that. This is the thing. So I look at it from the analysis. I analyze it, and in general, it would be okay. I see the point. I mean, it's interesting during the release, but at the same time, people might think that I'm giving you like financial advice or something like that. So that's the thing. That's where we don't want to do that, and yeah, I mean, we can try, like I said, I'll try to arrange something for live, but the problem is also that I do have my slot. Everybody has a time slot where they can jump in, because there's not only me, there are other analysts in other languages. So yeah, that's sharing is caring. So yeah, we need to kind of, like I said, we need to figure out that moment where this is my time, this is my kind of morning. I take that one. Before the market opens up, before the year, so kind of just to give quietly, calmly what's happening, what happened, like what's happening this week, what happened, let's say, in the previous days, and just to kind of talk about it calmly, peacefully, without like big market moves. But what we can do is, let's say, separate maybe sessions on important data, as you said. We had this idea before, but again, it's sometimes you need to have a look if we are actually going to be attracting a lot of people or not. So yeah. Like I said, I'll work on this. Don't get me wrong. I'm not gonna leave it like this. I'm gonna work on this, and hey, let's see if that's gonna attract attract more people. So going from cryptos and jumping into Forex. Now, it's a bit of a roller coaster ride here on AUD/USD. For now, I think that I'm going to approach this purely from the technical perspective because, again, at this point, it's okay. Look, we got some numbers. We got some flash numbers from Australia this morning. As I said, they were a little bit on the better side, so we're seeing some sort of positivity a little bit. And look, I think that the bulls are really trying to pick up on this one because I think that they are seeing that DXY could end up correcting back down a little bit. I mean, at some point in the near future, in the very near future. So I think that the bulls are waiting for this moment where they're going to jump into AUD/USD or like EURUSD or gbpusd and drag this one higher. But look, for now, I think that let's keep an eye on it. I'm wondering if I can apply this or not, this idea of a falling channel here. Okay, something like that. Look, it's probably, maybe I'm trying to see something where it's not, but it could be an interesting one here. If this is a falling channel, I'm looking at this idea where, look, I've talked about it before and I'll say it again. Whenever we have a strong decline and then a gradual decline, then there is a chance for a breakout higher. So basically, we're in order to go to the upside, a break of this upper side of the falling channel would be required. Simple as that. In the meantime, we could bounce around here. We could go back maybe to the 200-day EMA. If you're comfortable in trading something here, okay, be my guest, but just, have your stop loss in place because this could, reverse very, very quickly. And I keep on saying that while we remain inside the, let's say in this case, the falling channel, we could still drift lower. Quick update on the AUD/CAD. Now, yesterday, AUD/CAD here, we saw a decline here, but look, there was more weakness in the Australian dollar rather than in Canadian dollar because the Canadian dollar yesterday, it was a little bit kind of subdued, I would say. Again, depending on the currency against which it was trading, it was a little bit, yeah, it was. I wouldn't say straight. I wouldn't say that it was straightforward. You can understand, like, was it good or was it bad? Was it selling off? But look, Canada yesterday came out with the interest rate decision. They dropped it by 50 basis points. Look, I was the person who was advocating that, hey, you know what, it's way too much to do maybe 50 basis points, but they did it because I was kind of thinking that they need to strengthen their currency a little bit. But at the moment, as one of the gentlemen who I think it was Jamir who mentioned this. Jamir in the comment yesterday, because he mentioned that, and actually I'm not gonna, I don't know if he's watching this or not, but like I said, he made a good point that given that we're seeing this lower inflation, you want to cut more rates because you want to increase spending so that inflation would come back up again. Again, that is true. However, you need to be very careful here because you don't know how your currency will react. Will it actually create more problems? Will it devaluate more your currency? If you are seeing already, if let's say inflation is dropping and your currency is also devaluating, I mean, if you're gonna lower rates again, you're gonna increase that devaluation. So you're gonna throw in more money into the economy. So you keep on devaluing your currency. Again, this is the theory. Oh, just a second. I'm watching the. Yeah, I think bears are waiting for a bearish dollar too. What do you think will trigger that? Okay, just a second. I'll get to the US dollar. But yeah, coming back to the Canadian dollar. Look, this is where like I said, this is where the my little confusion is that. Here, I mean, right now we saw AUD/CAD drifting lower on the news, kind of strengthening the Canadian dollar. look, I think that for now maybe they're trying to pick up on something, any, let's say, somewhat positive news, which could be, let's say, like a drop in interest rates, which could be, let's say, not very beneficial for the Canadian dollar later on. That could that may be seen right now as a positive for some reason because you're kind of supporting the economy. However, I doubt that this is gonna, let's say, nurture into something good because look, CAD CHF, it's stuck. CAD JPY, it popped yesterday. Okay. This here again, it's a Japanese yen problem because right now the Japanese yen is now the Japanese yen. With the problem with the Japanese yen is that everybody's now thinking, will we get another interest rate hike by the end of the year from the Bank of Japan? And if we're not, then okay, like look, this is weakening the Japanese yen, and this is that they have a situation where they're hoping for a hike in order to strengthen the Japanese yen, but at the moment it's on a decline mode, and I think that it might stay like this. So that's where the little contradiction is. So Bank of Canada is the one way, the BoJ is the same thing, but is the other way. So that's where, like I said, that's where the problem is. Okay, at the moment, like I said, at the moment, I think every central bank has a little bit of a different approach, of course, but in general, in order to strengthen your currency, you need to hike rates. And if your priority maybe is not the currency, then okay, then you continue cutting rates, and in order maybe thinking that you're going to boost the economy this way, that's absolutely fine. But again, I think that this all comes back to priorities. Anyway, for looking at the USD CAD situation here, we saw initial spike here, pushed it a push higher, but now we're seeing a bit of a drift lower. Look, I'm not going to rush into this. At this point, I don't like it. I want to see what's going to happen because at the moment it's like mixed feelings. It's mixed feelings because I think that for now, maybe this could go lower on the weakness of the U.S. dollar, not because of the strength of the Canadian dollar, but the weakness of the U.S. dollar. And coming back to this, the question what Tabish asked in terms of what could trigger, I don't know what will trigger it, but what could trigger it is maybe the fact that we are getting closer to this, to the 7th of November meeting. So we have like 2 weeks left, if I'm not mistaken. Let me just double check. Is that 2 weeks? Just a sec. Yeah, I think it's 2 weeks. Let me just double check. Yeah. So 3 weeks. 3 weeks roughly. Right. And this is the thing. Or 2.5 weeks. So this is the thing that the market is expecting a 25 basis point cut. So basically, the market is expecting a cut. And once we're going to get closer to the meeting, I think that the market will be, oh, actually, you know what? We're going to be getting a cut. Ooh, and that's where maybe the weakness to, so building up anticipation that we are going to be getting a cut, so that's not good for the currency, and let's decline, let's drift lower. Okay, look, for now, I mean, okay, this is, like I said, this is where the different analysts, different economists kind of start, debating and everything, because I cannot disagree with the person who wrote the comment, Mr. Jamir, and saying that, when you're cutting rates, you're kind of increasing spending. In this way you could boost inflation again. You could boost maybe later on, but that's later on. For now. I would say just it's in general. If we take the point that whenever we cut rates, we actually create more inflation. We devalue the currency, so that's the problem. So at the moment, okay, the situation with the U.S. dollar. So this is where I'm trying to put it in my head and follow the path logic. So we're currently expecting a rate cut. Okay, that's a bearish element for the currency. However, given that we are still further away from the meeting, the US dollar rallies, and it seems like it's ignoring the fact. However, once we start getting closer to the meeting, everybody will start talking more about it, and people then, oh, you know what? Actually, that could devalue, our currency, and this is where maybe the US dollar could start dropping. And basically, on the before the meeting, like let's say a week or 2 weeks before the meeting, it could start correcting lower just because everybody would start talking about the Fed meeting again. That's my idea. Again, I might be wrong, but this is where my logic is. And okay, I think that there's so many different views and ideas that that I think that yeah, everybody has an opinion. So let's see. That's the only thing I can say. Let's see how it's going to play out. We can try to predict it. But hey, we try to predict and God laughs, right? So yeah. For now, like I said, I'm gonna take that approach. Actually, I'm gonna stick to my guns, and I'm gonna stick to my. If I'm gonna be wrong, I'm gonna be wrong. But for me, that sounds logical. And just based on the history, yeah, it's just I think in my opinion that's how it looks. But if somebody can prove me wrong, then please, I'll be my guest. Honestly, I'm more than happy to hear different opinions, because I don't know everything in life. But look, what I know is that usdjpy has reached my target. 61.8% on the Fibonacci retracement. Bang, fantastic. Look at this nice correction back down. Great, wonderful. So what's next? Next, of course, if we want to go further north, then we need to see a clearance of the 61.8. If we can get that, amazing. More buyers could join in. For the downside, I'm going to take a bit of a conservative approach here, and I'll wait for a drop below the 200-day EMA, and then I'll go lower. Quickly on GBP, GBPUSD. So, beautiful hit, beautiful touch. Let's see if we can do this. Well, that would be really interesting. That would be really cool if we can do that correction lower. For the downside, I'm just gonna continue keeping an eye on that upside line and the 200-day EMA. If we can clear that, wonderful. I will go lower. In terms of economic data from the UK, again, the same car production came out, by the way. Ooh, car production. One of the top UK's exports. Yes, car production. Cars. They're luxury cars, of course, as we all know. We know the brands. But hey, car production has declined year on year. And that has been in the negative zone since April of this year. So not very good for the car industry. Let's see what else we had here. Did we have anything else? Or will we have anything else? Yes, the same story. Composite manufacturing services PMIs are coming out later on. So the flash ones, currently expectation is relatively flat, to be honest, the same as previous. The interesting bit could be that if the numbers what's interesting is going to be how much they will deviate from the forecast. If they're going to be close enough, I don't think that we're going to see much action. But if they will deviate a lot, and what I mean by a lot, let's say it drops to, let's say, 49 here everywhere, right? Oh, now that's very interesting. That would be a little bit of a concern. Basically, if it drops below 50, that's in contraction territory. The industry is in contraction territory, and not very good. So, coming back to the situation here, look, as long as we stay above this upside line, I will continue considering here a possible rebound. But if we somehow clear the upside line, we fall below the 200-day EMA, I'm going to go lower. Quickly on EURUSD. By the way, EURUSD is an interesting one here, because I said to you that yesterday that we might be in a falling channel, falling wedge pattern. According to all the TA rules, such patterns tend to break to the upside. So, yep, we are near the upper side here, so we're trying to flirt with it. Hey, if we can get a nice clearance again and push above this, I will go to the upside. And for the downside, for the EURUSD, look, again, beautiful beautiful rebound here from this upside line. So far, so good. Look, I mean, this is working out nicely. First of all, this Fibonacci no longer needed. Yep. And I think that what's best here is to keep an eye on this upside line and this 1.0777. If that gets cleared, I will go lower. I will go towards some of these levels. Let me just put this on the chart here. So I'll go somewhere towards this area here, the 1.0667 or 66, if you want to put it there. In general, I would like to see a rebound because I think that we have retraced quite decently. So maybe it's time for a little bit of a correction back up. But hey, I think that we need to be a little bit more on the careful side. Look, 1.0811. I will keep an eye on this one. This is the low of the 17th of October. So if we can climb back above that area and stay above it, I will consider maybe a bit of a retracement back up. But if we start falling below this upside line, and we fall, let's say, below this 1.0777, well, that could open the door to some lower levels. Of course, we're keeping an eye on the flash estimates. The same story. If we deviate a lot on the European, I'm talking about the Eurozone and the German flash estimates, flash PMIs. If we will deviate a lot, then we will see like a reaction here and there. We could see a stronger reaction here and there. So if we, let's say, decline a lot in the on the numbers here, let's say we drop very much below, these forecasts because they're already on the lower side. Look, German manufacturing flash. I mean, we have been like in this contraction territory for quite a while now. In general, I would say, okay, the market, is already anticipating maybe low numbers already. But this is the thing: if we come out, let's say, somewhere higher, I think that this could result into some positivity here. Hey, let's see, because this again, the expectation is that we're already on the lower side. We're already low, and so if we get another lower number, okay, it could drift a little bit further south, but we have been selling off on the eurusd here for a lot now, so it wouldn't be, let's say, that much of a big news. But if it comes out higher, and then yes, that's like, ooh, great, finally we can pick up on something positive and drive eurusd back up here. Let's see how this is going to play out. For now, that's my idea. Let's see if it's going to work. I mean, tomorrow I'll pick up on this. We'll look into all this again, see what worked, what not. But hey, look, in general, thank you very much, everybody. This is where I'm going to wrap it up for today. Tabish, thank you very much for your questions. I really, really appreciate that. Honestly, that does help a lot because we sometimes I come to something you make when I get questions, it forces your brain to work a little bit more because maybe you were saying something which doesn't make any sense, and actually question makes your brain turn a little bit faster, and then you're like, oh, actually, you know what? I was wrong on this one. Actually, this is how it is. So yeah, by the way, I'm never ashamed to admit my mistakes because hey, I learn on my mistakes. I don't know about you, but I do. But yes, Mr. I don't know if you're watching or not, or what's the situation, Mr. Jamir. Thank you very much for your comment on the BoC situation. I really appreciate that. And like I said, I do not argue with that on that one. The only thing is that I think that we are wondering what's the priority of the BoC. What's if it's to save the currency. Fair enough, like you wouldn't go for those cuts, but okay, when you're saying that we could boost inflation later on because of spending, that's a very thin line because again maybe it might not. On the contrary, you're going to increase inflation, you're going to increase devaluation, you're going to throw in more money into the economy, and yeah. Look, you're not gonna save. So it depends from which perspective are we looking at. In my opinion, if we're trying to boost inflation back up, yes, it might help. But then maybe it could backfire with like I said, if the currency gets into that spiral of devaluation, then it's a little bit difficult to to save it. Anyway, and on that note. Thank you very much. Ladies and gentlemen, stay safe, have your stop losses in place, risk only what you can afford to lose, don't overtrade, and everything will be fine. I'll see you everybody tomorrow. Thank you very much, and bye-bye.
you.